In terms of where we sort of see the market go, I mean, the first thing I tell everybody is I have no idea. But we, in terms of the next 6 months, not a clue. There's so many different ways that things can go. Those of you who may have read my commentaries understand that I don't believe in being a market timer, but I do believe in being properly positioned to meet the goals that you're looking for. So in the context of over the next 6 to 9 months, our feeling is that probably we're going to see a slow return up to somewhere around, our target is around 3,100 on the S&P by year end, which is a modest growth level from where we are today. But I think in between now and there, I think it's going to get probably pretty choppy. And we're going to probably see more down days than up days. But I think as things kind of move forward, we'll hopefully see some earnings numbers starting to improve. And by the way, I mean, where we are right now has already got earnings discounted significantly. So our feeling is that we will see an improvement. And I think obviously once you get a vaccine or at least a treatment in place that people feel comfortable about and raise the level of confidence in the consumer to get out and move around a little bit more, I think then you're going to probably see a lot of the money that has been flowing from the government into the financial system really taking hold, and we'll see an improvement in 2021.
Kevin, this is Mark Grace. I have a question, and I don't know if everybody else is in the same boat, but my broker, for I guess 25 years, and great guys and gals, and but I guess it's about 10 years ago, I gave them a chunk of money and said, okay, you invest it, totally up to you, pay the fees. And then I said, I'm going to take the similar chunk of money and invest it and see what happens. And mine's, tripled. Theirs is at this very moment exactly at the point it was 10 years ago. And I bet you anybody that's in a broker right now, their money is exactly where it was 10 years ago because the market's dropped to where it was about maybe 10 years ago. How do you have a conversation with your broker about that, Kevin? I mean, it's not a pleasant conversation. What outcome should I expect from my broker? Yet at the same time, my broker's collected a significant number of amount of money.
Yeah, no, it's a hard conversation to have, the things that I see in some cases I feel are a little bit unconscionable in terms of some of the broker statements I get. I mean, in some cases they're very concentrated in certain areas. I remember after the tech. Or after the financial meltdown in 2008, people were coming to us, and in some cases their portfolios were down 90%, even with the S&P down, roughly around 50%. So that was primarily because of the concentrated nature of some of the investments they're in, and I'm sure that in some cases people are feeling a disproportionate level of loss even now because maybe the concentration was such that it didn't take into account the ebbs and flows of different sectors. So, I think the first thing I would always be talking to my advisor about is to say, how well diversified am I? I would also ask, as I said before, about, from a compensation standpoint, are you in a particular fund or a series of investments simply because maybe their broker dealer has a financial interest in that, and therefore that's the one that they're being incented to push you into. These are all things they're hard conversations to have, but they're fair to ask, and that's where the transparency needs to come into play, I think.
I appreciate it. Yeah, tough conversation because they haven't changed. I mean, 10 years and the money still sits there. I should have left it in cash and not worry about all this.
Right. Yeah. Well, the problem with cash too is it's obviously, as you know too, it's not paying you much of anything, and it probably won't anytime in the near future. I mean, a couple of things that we're looking at that we're kind of reevaluating our investment portfolios on right now is the amount of bonds that are in portfolios. Typically, you play offense with stock and defense with bonds. But what we believe to be a higher inflationary environment in the next few years, that's going to be an area that we're going to be reevaluating and probably moving our clients a little more into an equity position than maybe they would have been before, just to help, drive a little bit better return, but still diversifying them enough to where they're not necessarily, we're creating undue risk in their portfolio.
Hey, Kevin, this is Bill. I wanted to ask a question relative to dividend paying stocks.
Yeah.
You see a lot of vulnerability in that sector where large blue chip companies that have historically paid good dividends may suspend or cancel dividend payments and therefore kind of blowing up the whole strategy of investing in dividend stocks rather than capital appreciation?
Well, I mean, I think it's a very real thing, and we're seeing a little bit of that happening, and I think you're also seeing that fear translating into the values that maybe certain mutual funds that focus on what we call the aristocrat funds out there, the large S&P funds that have typically paid dividends for at least 25 years. Those are taking bigger hits than the broader S&P market right now. And but in many cases, I think if you invest in that that bundle of stocks that have historically paid dividends, that group, I believe that they're listening to the CFOs of some of those companies, they take a lot of pride and see value in continuing to do dividends, even if they cut dividends. I don't think they're going to eliminate it, and therefore they stay in that that grouping that I'm talking about. So we're still invested as a part of a mutual fund holding in the aristocrat dividend fund groups. But I think you're going to absolutely see some companies who maybe don't hold that at such a high level of value for their company culture. You're going to see them cut it back. And I think even the groups that are in the aristocrat funds that are available out there may cut those dividends back, but they're probably not going to eliminate them altogether. But the unknown associated with that, I think, has put a higher downdraft weighting on those particular funds than what we're seeing in some of the other funds right now. It's typically by several percentage points.
Kevin, it might be helpful just to repeat again to the group. What should they be looking for to help you with landing new clients? So, what would be the ideal profile of one of your clients?
Yeah, well, I think life transitions. I think that's usually where I think we really shine the most for our folks. Life transitions being change of jobs, change of careers, a divorce, a death in the family. Those are the typical ones that most people run across who have friends or family members that experience. Unfortunately, right now, we're living one big life experience, and I think that this is going to change, in many cases, a number of people's lives in terms of not only where they work or how they work, but in some cases, it may have to change jobs or careers. That gives them an opportunity to take that maybe a nest egg that they've built and maybe have been somewhat limited in the company structure of their 401k to be able to more diversify it, do a little more proactive planning. And that's the kind of people that we find that we can add a lot of value for.
Terrific. Any other questions?
And folks too, I will tell you, I mean, as I said, I am especially, I'm a teacher at heart. I love giving out information and trying to help people learn. So to the extent that you have advisors, I recommend staying with someone that you love and that you trust. But if you want a second opinion, or if you just have some questions like the one that Mark was raising earlier, I'm happy to be a resource for anybody on this call. So don't hesitate just to reach out to me. You're not bothering me. I love to have the conversations. As far as the other thing that I mentioned when we first got going, I've provided Jim a output from a good friend of mine who has a marketing company. They focus primarily on the political side of the world, but what they've done is they've gone out and done an exhaustive survey of consumers from through the month of March, during the time when things were really the roughest. And he has provided that to me and has offered me and told me that I can give it to my friends and clients as well. This is a this is an output that typically he charges around $5,000 to his clients for. But in the spirit of giving during this time, he wanted to provide this. So I've given that to Jim, and Jim, you can send that out to everybody. But I do think it's going to be, as business owners and business executives, I think it's worthwhile understanding kind of the mindset changes that are occurring in the U.S. consumer, and maybe points you in some directions in terms of some things to think about as it relates to your own business.
Absolutely. As a matter of fact, after we finish this meeting sometime today, I will send a thank you note to all of you individually, and that will be an attachment. So all the folks, at least on this call, will receive your gift. And then what I'll do is in a monthly update that I'll do at the first part of June, I'll refer to that and invite people to contact me, and I'll send it out to them individually as they're interested as well, Kevin, if that works for you.
Oh, that's fine. However you want to use it.
Terrific. Any other questions for Kevin before I make a final announcement and wrap it up today?
I just want to add one thing, Kevin. We recently, not too long ago, did some work for a private wealth manager. They had about $4 billion under management, and we called their top 40 clients. And some had 20, 30, $40 million with them. And the one thing that we found out that they said that they wanted was, when they got their statements every month, just for someone to call them and ask them if they had any questions about their statement. And that was just the simplest thing. They told us a lot of different things, but just FYI, that was one thing that they requested that wasn't being done.
That's good. I appreciate that, Mark. And yeah, that's something that we actually have been doing. Certainly over the last couple of months, we're putting more of an emphasis on it. I think most people are pleasantly surprised when they see the big red numbers on the screen every night, and then when they see their own numbers not being as bad. I think they, for the most part, they've been pleasantly surprised. Not to say that losing money is good in any form or fashion, but maybe it's less bad. One other thing, real quick, Jim, that I wanted just throw out to the group to think about. We're in the process of reevaluating our marketing as a company, and I'm not interested in really hiring a marketing person per se, but looking at doing individual projects, and ideally someone or a group that has been focused in the financial services area. What I really want to do is have someone that kind of gets away from kind of the traditional messaging around just the focus on, what you typically see from financial advisors around returns and performance and that type of stuff, but more, I think right now, a little more focused on trust and caring and talking a little bit about, life planning. So if anybody knows anyone or has good experience with a company that you think we should talk to, I would love to hear from you as well.
Great.
Yeah, Kevin, if I may, at Chief Outsiders, we have people that do have financial services backgrounds. So I may want to, if you wouldn't mind, I might want to connect with you or call you if that would help.
Absolutely. That'd be great.
Good. Okay. Well,